Hello everyone. In today's video I would like to go over the double entry system for assets, liabilities and capital, and then I will teach you how to balance off accounts. I will start with a review and then I will get into the double entry system. Let me remind you that you can get this file by looking at the video description. You should be able to access the file that you're looking at right now. So there is a complete video on the review I will do right now, so feel free to take a look at that video again if you think you need the help before actually going into the double entry system. Basically at this point you should be able to distinguish between assets, liabilities and capital. I have a definition for each of those terms and I have examples. Let me go over the examples. Examples of assets include cash in hand, cash at bank, accounts receivable, inventory, land, building, equipment, and machinery. The list is not limited to that, of course. There are other examples. Liabilities. Liabilities include accounts payable, loan from, it can be any institution or any person, and a mortgage. For capital, the only example of capital so far in this class is capital itself, or also known as owner's equity. Now, let's get into the double entry system for assets, liabilities, and capital. Every transaction so far at this point you have had the exposure to transactions, and I have one transaction for you right here. The transaction is dated March 10th, 2021. The transaction is sold land for $20,000 cash. From this transaction right here, you should be able to tell me what two accounts will be affected. The two accounts that will be affected from this particular transaction is land and cash. So let us figure out what are the effects of those two accounts, because not only should we know which accounts will be affected, what I covered at the beginning, but you should be able to transfer this information into what we call T accounts. T accounts or ledgers look like what you see here. This is a perfect example. If you notice, it resembles a T, okay, a giant T. The T account has a left-hand side known as the debit side, abbreviated as DR, and then you have a right-hand side known as the credit side, abbreviated CR. On both sides, you need to enter a date, description, and amount. So those are the columns labeled right there. So going back to the transaction, we know that land and cash will be affected. But how do we know where to enter this information now that we know that cash and land will be affected? Well, we have to know a couple of rules before we actually start using the T accounts. We will in a bit. The rule for any asset account, meaning any of these are and any other asset account that you can come up with, any asset account increases on this side, which is the debit side. So asset accounts increase on the debit side, while they decrease on the credit side. This rule never changes. The debit side will always be the left-hand side, and the right-hand side will always be known as the credit side. That rule never changes, similar to the rule I just explained to you here, whereby assets increase on the debit side and they decrease on the credit side. Now, if you memorize or you learn that rule, then you should not have any trouble learning the rule for liabilities and capital, because it works the other way around. Liabilities and capital, so if you were to take any of these accounts or this account, you know that because they have the opposite rule to assets, you know that liabilities and capital will increase on the credit side, which is the right hand side, and they will decrease on the debit side, which is the left hand side. Okay, so keep those in mind. I always tell my students, learn one. Learn assets, for example. Assets increase on the debit side and they decrease on the credit side. And then for liabilities and capital, you just switch the rule around. Now going back to this transaction, sold land for cash $20,000. We know that land and cash will be affected. When you have a transaction and there is cash involved, money or any type of money, that is the easiest thing to analyze. Okay, so cash and land. So what I will go ahead and do right here is I will name this account. That is cash. That's the first T account that we'll use, and the other one is land. Those are the two T accounts. Now, cash, let's figure out what's going on with cash. What's going on with cash? Well, cash, if you notice, we are selling land for cash, so that means that our cash should have increased because we just got some cash for the sale of this land, right? So this account needs to increase. And this account is an asset account. Where do asset accounts increase? They increase on this side, and this side is known as the debit side. So I need to look at the original transaction and enter a few things from here. I need to first enter the date. We always start by entering the year. We only write the year at the beginning. And then after that, it's only the specific date or month and day. So here I will say 2021. It is March 10th. I will leave the description for last. The amount that we received in cash was $20,000. Now, this is the first effect. The double entry means that every transaction must have two effects, hence the name double entry system. So we have done one entry that's almost complete so far, okay, on the cash account. Now I need to figure out what will happen to land, okay? So we sold land for cash $20,000. Basically, we have no land or less land at this point. So we lost land. Keep in mind that land is also an example of an asset. So if we are losing land, that means that the account is decreasing. So we need to do an entry on the opposite side or on this side of this T account. So we need to enter the year. That's how we start. 2021, March 10th. I will leave the description for last. The amount also is $20,000. Now, the only thing that I left incomplete here was the description. And the reason why I do that, because out of every transaction, you should have two accounts that will be affected. So the two accounts are cash and land, of course. So the description here will be the name of the other T account that was affected. So it will not be this. It will, the description that you guys will type here or write if you're using pen and paper will be land. And then the description here will be the name of the other T account, which will be cash. So at this point, your teacher or an accountant or a person teaching you should be able to go back to this T account and say, well, on March 10, 2021, there was an increase of cash by $20,000 because it seems we perhaps sold land. And then here, on this account, on March 10th, which is the same date, we got cash, or we sold land rather, in exchange for cash. How much? $20,000. This account is increasing, this account is decreasing. Both accounts are assets. However, this is increasing because we got cash in exchange for the land. However, we lost this, the land decreased on the credit side because We got rid of it, so to speak, but we got some cash in exchange. So we have a debit and a credit entry. Now let me go back here. The double entry system says that every transaction must have two effects. Two accounts must be affected, such as the one I presented to you here, land and cash. In addition to that, the double entry system says that from these two accounts affected, one must be debited and the other one must be credited. Every single transaction works like that. Each transaction must have two effects, and one entry should be a debit and the other one should be a credit, regardless of the category or type of account. So meaning you can have an asset here and a liability, you can have an asset and capital, but the rule remains you need to debit one and credit the other. Now let's get some practice with this. Here I have a list of transactions that I have posted already. I will just go over each transaction and then I will show you what is the entry that I did, so that this video can be as short as possible. So I have the transactions repeated all the way down, so I don't need to scroll up and down and give you guys a headache. So let's start from the very top. 2012, June 1st, started business with $16,000 in the bank. So here we need to analyze and figure out what are the two accounts that will be affected. Well, there's money involved, bank, and how much? $16,000. $16,000 to start the business. So the business now has $16,000. Thanks to who? It did not appear by magic. It was the owner who invested or brought this money here. So we call that capital, which represents the ownership of the proprietor. So the two accounts that will be affected here will be bank and capital. So the bank will increase because the business has more money now. And if you remember, if you want to increase an asset, you do it on the debit side. So I need to debit the bank. It's the first time that I enter a transaction on this side of this T account, which is bank. So I will go ahead and type out the year, which is 2012, June 1st. The other T account that I will use will be capital, and the amount is $16,000. This is the debit entry, and we said that the other account that would be affected would be capital. So if I were to go to capital, you would see a credit entry on that other T account. So if I move down and I look for capital, this is the credit entry, which is the same date, June 1st, 2012, bank, because that's the name of the other T account that was affected, and the amount remains the same. That takes care of that. Now, if I look at transaction 2, which is on June 2nd, it says bought van, paying by check, $6,400. So what are the two accounts that will be affected here? We're buying a van in exchange for, we're paying with a check. So that means that our bank will be affected. So let's figure out what will happen to our bank account. So we're paying for the van, so that means that we will have less money at the bank. So if we will have less money at the bank, and bank is an asset, that means that it will decrease. Asset accounts decrease on the credit side. So I need to enter that transaction here. So 2012, June 2nd, description van, because that's the name of the other T account, $6,400. If this is a credit entry, I can go to the account van and find the same transaction but on the opposite side. So van, debit side. Now, why did we debit the van? Well, we debit the van account because we just purchased a van and this particular account is categorized as an asset account, and we want to increase this because now we have a van in our business. Let me just bold this to make sure I cover all the transactions. The third transaction is June 5th. Bought office fixtures, $900 on credit from Old Limited. So here we're buying office fixtures, which is an example of an asset. So this is the first account that will be affected, office fixtures. But we're buying it on credit, so that means we did not pay for it, and so we owe Old Limited. Old Limited is a liability here. So let's look at office fixtures. Office fixtures, we're buying office fixtures, so that is an asset account. It is increasing. Asset accounts increase on the debit side. So you can see the transaction right there, 2012, June 5th. Description Old Limited, because that's the name of the other T account that we will use, and the amount is $900. This is that debit entry. So if I were to go to this account right here, which is Old Limited, I should be able to see something similar, but on the other side, which is the credit side. So Old Limited, right here. The year is the same, 2012, June 5th. Description office fixtures, because that is the name of the other account we just used, and then the amount remains the same. Let's look at the other transaction, which is June 8th. Bought van on credit from Carton Cars Limited, 7,100. So we're buying another van. We purchased one on June 2nd, but now we're buying another one. But this time we're buying it on credit. So we did not pay for it. So if we go to the van account right here, this is the entry. We're getting a new van. Remember, this is an asset account. We want to increase it because we have acquired a new van. So the date is right here, June 8th. Description, Carton Cars, and then 7,100. That's what we paid. So if I were to go to the credit side of this particular account, I should be able to find the same entry. Here is the entry. This is a liability, and we owe Carton Cars this amount. Keep in mind that liabilities increase on the credit side. So that's the reason why we posted this transaction on the credit side. 2012, June 8th, description van, amount 7,100. Let's move on to the following transaction, which is June 12th. Took 180 out of the bank and paid it into the cash till. So the money is staying within the business. It seems that we ran out of cash. So we went to the bank, we took out 180, but we took it directly to our cash till, which is basically cash in hand or simply cash. So if we're taking money out of the bank is an asset account, it will decrease because money is being taken out. So I need to do a credit entry, June 12th, description cash, 180. So if I were to go to the cash account, I should be able to find this transaction on the debit side, which is right here. Okay. So why is cash going up? It's because the money that we took out from the bank, it's coming directly to the cash till or cash pan that the business has. So this money we will use for daily operations. That's why it is a debit entry, because it is increasing. June 15th, bought office fixtures paying by cash, 120. We are buying office fixtures once again, and we're paying by cash. let's figure out the cash first, because the cash is the easiest thing to analyze. So if we're buying office fixtures with cash, that means that our cash will decrease. Cash is an asset account. It will always be an asset account. It will never change. So that means that our cash at this point will go down because we purchased office fixtures. So you can see the entry there, 2012, June 15th, office fixtures 120. So if I were to go to the debit side of this account, I should see the same entry, June 12, 15, right here. So that is the debit entry. June 19th, paid Carton Cars Limited a check for $7,100. So we're paying this company right here, and if you remember, we purchased a van from this company and now we're paying them with a check. So if we're paying that company with a check, that means that we will have less money at the bank. We need to credit the bank because we want to decrease that. So that is the entry, the credit entry. So now I can go to Carton Cars and find a similar transaction on the debit side. This is also a liability. I can't recall if I mentioned this. This is a liability. At this point, we are doing a debit entry because we are paying them. So that means that we owe them less. So we need to do a debit entry. The following transaction. June 21st, a loan of $500 cash is received from B. Berry. So we're getting some cash from Berry. Remember that cash is an asset account. So if you want to increase an asset account, you do it on the debit side. You look for the correct account. It is cash. So that's a loan from Mr. Berry. So I can go to the other T account, which is loan from Berry, and I should be able to find a credit entry on that particular T account right here. Okay. This is also a liability. Why did we credit that particular liability? Remember that liabilities increase on the credit side. June 25th, paid $400 of the cash in hand into the bank account. So the transaction that you see here is the opposite of what happened on June 12th. Now we are taking some of the cash, the physical cash that we have, and we're taking it to the bank. So we can figure out any of those. Let's start with the bank. So if we are taking money to the bank account, that means that the bank will increase. We will have more money at the bank. So that transaction is reflected right here. June 25th, the bank went up by $400 because we brought in cash. So I can go to the cash account and I should be able to find a similar entry but on the credit side. So cash went down, credit entry, by $400 because we took some cash to the bank. The last transaction, bought more office fixtures paying by check. If we're paying by check, that means our bank account will decrease. We will have less money at the bank. So credit entry. I can go to office fixtures and find a similar transaction on the debit side. That is the transaction right there. And that covers all the possible transactions that you will perhaps encounter for the upcoming test. So now that we have posted all the transactions, meaning we have taken these transactions which were given to us in a sentence form and we enter the transactions into T accounts, posting, now we can go ahead and balance off. So this is the result of all our posting. It's the same information on the other tab right here. Again, remember that this file is in the video description. So how do we balance off? Well, first of all, we need to figure out what are the totals for each side. That is the first step to balance off, which I spent a number of days explaining to you guys. So as a reminder, if we take this side and we add these two, we will get 16,400. If I add the credit side, all those numbers highlighted, I will get 14,160. So clearly the two totals do not equal to each other. When the two totals do not equal to each other, we have to subtract. So these are the two totals. On this side I have 16,400 and on this other side I have 14,600. So in order for me to find out what is the difference, I will always take the largest number, which in this case it is on the debit side, minus the smallest number, which is 14,100 on the credit side. I subtract those two and I end up with 2,240. This is the amount I need on this side of the T account to make both sides equal to each other. That is what I want to do. So if I were to insert this difference right here, now these two totals are the same. You can verify that with your calculator if you wish. I could do it here for you. I highlight those two. It's 16,400. I highlight this plus the new number I included. It's 16,400, hence the function that I have here, and now you can see that is 0. So with that, this difference right here, we call it the balance. Okay, so I need to have a date and a description for that. The date for that will be June 30th, balance carried down. The balance carried down will always be the last day of the month that they have on the T accounts. So all the dates were June, so I use the last day in June, which is June 30th, balance carried down, because that's the balance that will be taken or carried to the following month. It is 2,240. So I go ahead and I single line and double line on both sides because these two numbers or totals are the same. Now I am not finished there because I need to take this balance and take it to the following month, which is July. So first I transfer that balance carried down here on the opposite side. The date will be first day of the following month, July 1st, and I will label this balance brought down. The balance carried down and balance brought down will always be on opposite sides, and the dates can be repeated in real life. It will be repeated, so don't worry about duplicating or repeating the dates. Now, what happens if you have a T account similar to this? By the way, this is balance off right now, right here. That is it. If I were to explain this as brief as possible, basically with the amount of money that came in, which was this, the investment and the payment that we received, and then with everything that we paid out, we still have a balance at the bank of 22,400. 240. This is the amount of money that we have as of July 1st, 2012. So we still have some money, so we know more or less how much we can spend. Now what happens if we have something like this, whereby we have 3 transactions on the debit side, which add up to 1,500, and then on the credit side we have 0. Well, we apply the same principle. We need to figure out what is the difference. Even though this is not necessary, I included this calculation. So on the debit side, the total is 1,500, which is the addition of these 3 numbers. Here I do not have anything, so it is 0. So basically I need, if I do the largest number, which is 1,500 minus 0, I need 1,500 on this side to make these two equal. So I will insert this difference on the smallest total, similar to what I did on the previous account, and I will insert that here, 1,500. The year is 2012. This will be known as the balance carried down, so I need to use the last day of the month. Which month are we talking about? It's June, so it will be June 30th. Balance carried down. So this number, this total is 1,500. This other is the same, so we go ahead and we single line and double line. Now that we have a balance carried down here, we need to transfer that to the opposite side, 1,500. This will become our balance brought down for the following month. So that will be July 1st, balance brought down. So these were the office fixtures that we purchased. We finished the month with the same amount of office fixtures. We did not buy more. So we will start the following month with the same amount of fixtures. That is what that is telling us, basically. Now cash. Before I proceed to cash, something that I forgot to tell you, the idea of the single and the double lines and the number that you see in bold there is to get it on the same row. So the single line should be on the same row all the time. The totals that you see in bold should be the same. If when you are doing your rough work and they are not the same, then you need to do the calculation whereby you do largest number minus smallest number to get these two to balance off, to make them the same. And the difference, you insert that wherever you have the smallest total, and then they should equal to each other. Remember that the balance carried down and brought down will always be on the opposite side. Keep in mind what I just said a few seconds ago. The single, double lines, and the total must be the same and must be on the same row, similar to what I have here. Your rough work should not be included here. I know that this looks different because when I was teaching it, I was doing it on paper, but now it's being done on Excel, which is the same thing. It's just it's going a bit faster for you guys. So I suggest you pause the video now and then just to make sure that you're getting everything and be ready for that test. Now here, I have another T account that we posted before. If you remember, all these accounts we posted before, and now we need to balance them off. If this is the rough work part, whereby I add the debit side, it adds up to 680. And then if I do the credit side, it is 520. So those two totals are not the same. So what I need to do is I need to take the largest number minus the smallest number. I have 680 on this side and I have 520 on this side. So I'll do 680 minus 520 and I get 160. So this 160 needs to be entered on the smallest total, which is the credit side. So I go ahead and I enter that here, 160. Last day of June, June 30th. Balance carried down, 160 of course. I can go ahead and single and double line that because they are in the same row already. And the last thing I cannot forget is to transfer this to the opposite side. So I'll go ahead, let me paste this. I can move a bit faster. The amount is 160. Do not transfer here a different number. Some students transfer the number that was single line and double line. Make sure that you are transferring the carried down here to the opposite side because sometimes it will be on the other side. All of the accounts we have balanced so far, they are all asset accounts. And for asset accounts, it is common to find the balance brought down on the debit side, and you will see what happens with liabilities and capital, but you can guess at this point that it will switch sides. The other account right here that I have is VAN, which is also an asset account. So if I were to add the debit side, I have 13,500 and on this side I have 0. So there is a difference of 13,500. So this is the difference right here. So I need to insert this difference on the smallest total, which is the credit side. So I will go ahead and I will enter it here because I need to type the date here. So 13,500, 2012, last day of June, June 30th, and that will be balance carried down. At this point, the two numbers or two totals are the same, so I can go ahead and single line and double line in red. And I can transfer this to the opposite side. So I'll use the same date. So it's July, June, July. And the amount is 13,500. Careful with the dates. I thought I had typed out here June, but I did July. So careful with your dates. Carried down will always be the last day of the month. Balance brought down will be the first day of the following month. So all of those accounts were asset accounts. They all have the balance brought down on the debit side. And now we are moving to a liability. We purchased office fixtures from Old Limited, $900 on this date. So on the credit side, we have 900, and on the debit side, we have 0. So there is a difference of $900, of course, right? You do the largest number, the same steps that you did before. $900 minus 0 will give you $900. So you need to insert that difference on the smallest total, which is here. 2012, last day of the month. Which month? June. And that is balance carried down, not brought down. Okay. Now, if you notice, the idea of the previous account was to get the totals on the same row, as I mentioned several times so far. At this point here, the $900 is already on the same row, so there is no need for us to go ahead and single line, add, and then double line again, similar to what we were doing here, because the two numbers are on the same row already. So I will just go ahead and I will double line here, and I will double line there. So that is the balance carried down part. Now I can go ahead and do the balance brought down, which will be on the opposite side, because they will always be on the opposite side. So I will say July 1st, opposite side, balance brought down, $900. Same principle, just that we're doing it on the opposite side. Now here, for carton cars, if you notice, we have two entries, one on the debit side and one on the credit side. But and the two numbers are the same. So these two are equal to each other. So there will be no balance. There is no balance carried down, no balance brought down, because these two are equal. So when they are equal to each other, then you just go ahead, if the two numbers are on the same line or row or level, you just go ahead and you double line them. But if you had, so that's it right there. There's no balance carried down or brought down. But if we had other numbers here, then we would need to first single line at the top, single line at the top, double line, double line. But the two numbers are on the same level already, so they remain like that, similar to what happened here, only that here we had a balance brought down and carried down, which is the same amount. Loan from Berry. In this case, we have $500 on the credit side and we have 0 on the debit side. So I need $500 on this side to make this side equal to this side. So I will go ahead and I will enter $500 here. So now the two sides will equal to each other. But I need to give that a date. June, last day of June. Description, balance carried down, $500. The two totals are on the same level already, so I'll just go ahead and double line. And then I will transfer this balance carried down to the opposite side, which is the debit side. June, July. So July 1st, description, balance brought down, the amount 500. And the last account is a capital account. On the credit side, I have $16,000. On the debit side, we have 0. So I need $16,000 on this side to make both totals equal to each other. So I will go ahead and enter that. 2012. July 1st. Balance brought down. The two numbers, the two totals are on the same level already, so I'll just go ahead and double line in red. And do not forget, this is balance carried down. Do not forget your balance brought down. And this is supposed to be June, not July. I'm glad I picked up on that. So it's 16,000 as well. If it's becoming too much, like clearly it's becoming too much for me at this point, take a break, okay? You take a break and then you continue. It's important that you're not doing things while you're overwhelmed or confused. If you have someone helping you at home, please note that this, if you were to prepare a trial balance with this, I don't think it will balance off. It's not made to balance off, but perhaps it will. If you don't know what a trial balance is, don't worry, you will learn about that in the near future. So that takes care of all those transactions. I hope this will help you out for the upcoming test that we have. Best of luck on it, and I'll see you for our next class.